Hello, and thank you for joining us at XM.com. I'm Christina Maroucos. Joining me today is investment analyst Mario Sotiriakos. Thank you for joining us for this Forex Preview video. We'll be looking at the upcoming meeting between U.S. President Trump and Chinese President Xi at the upcoming G20 summit. Although G20 summits usually don't spark any reaction in the market, this one seems to be the highlight of the month. So should we be expecting the two leaders reaching some sort of agreement or deal?
I think that, yes, there are better chances for reaching an agreement to restart the negotiations than failing to agree to anything at all, right? There are incentives rather for both sides to go back to the negotiating table. Now, both sides want to support business sentiment at home. They want to protect their economies, basically. So even if no real progress is being made, and even though they might still be far apart on some of the key issues, they still want to portray a positive picture for the markets. Now, if you're the US or if you're Trump specifically, you have elections coming up. So you might want to avoid, imposing new tariffs on core consumer products like computers, phones, clothing, things that if taxes go up on, the consumer might feel a little bit irritated, and that might not help you out ahead of the election. So I think that, yes, both sides want to go back to the negotiating table, and we might see that this week.
Well, given this fact that both sides want a truce, let's say, how would that outcome of the talks at the G20 summit affect the markets?
So, first of all, it's going to affect multiple asset classes. So it's going to affect the risk sentiment. So if we see a deal to restart negotiations, stocks will likely move higher alongside some commodity currencies like the Aussie, the Kiwi, even the Canadian dollar maybe. Now, on the other side of the spectrum, we might see safe havens come off their recent highs. So the yen might lose out, the Swiss franc, gold. The dollar is a tricky one. If the restarting of the negotiations makes the Fed less likely to cut rates, that might boost the dollar. So, yes.
Well, I don't want to sound pessimistic, but let's have a look at the worst case scenario, let's say. President Trump feels like he has more leverage on his Chinese counterpart, and he might want to push things a little further, let's say. So in that worst case scenario where no deal is made at the G20 summit, how would that affect the markets?
First of all, you are right to one extent. I believe Trump feels like he has the negotiating advantage, let's say. So, for example, US stock markets are at all-time highs. That's how he really measures if what he's doing is correct. So he might feel that he has a little bit more leverage than Xi, and he might try to play hardball. Now, if that happens, which I think is the least likely scenario, but if it does, we're likely to see the opposite market reactions. So lower stocks, lower commodity currencies, and perhaps higher safe havens. So the yen might benefit alongside the Swiss franc and gold. The dollar might fall because that outcome could make the Fed more likely to ease its policy aggressively moving forward.
I see. So it's turning out to be a very, very interesting G20 summit. Maria, thank you for joining me and your insights, and thank you for watching us at XM.com.